Bring that ass back like a boom, 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 boom.
Good morning, everyone. Today is December the 18th, Sunday. 2 weeks to go in this really crazy 2022 supernova. You are with Boom Traders, and this is our weekly overview. As usual, we start with a disclaimer, and this disclaimer just says that we're not financial advisors, and this video is for informational purposes only. So none of the recommendations or stocks that we mention are financial recommendations, and the risk is on your side. As far as the session overview goes, as usual, we do have the models and market price section. We do have some internals that we look for the health and underlying strength or weakness in our case of the markets. We do have notes, sentiment, seasonality, and then we do a very quick summary. Now, given the fact that we are almost at Christmas and pretty much everybody's in holiday mood, I'm going to be very, very brief with this one. So the overall market model is on a sell signal since this week. Breakout model clearly not working. Long, mid, and short term also on negative, so that makes it really easy on my part. And I do usually have the market price action right here, but I wanted to revert a little bit and start with my notes, which include one slide only, and that is the Fed. Now I know there's a little bit of a game here with probably looking like the end, and pretty much the Fed has been the end game for now. Pretty much every FOMC meeting has turned out to be a huge volatility event. This one wasn't any different. So what we had this time is a 50-point hike. 2 more to come, probably February and March. But the important part here were the comments from Powell, who actually looked more hawkish than the markets expected. And although those 50 points of rate hike was not really a surprise. I mean, everybody expected that, and pretty much everyone knew that we're going to get at least 1 or 2 more hikes. Nobody expected the comments to be that hawkish. So market came in really rejecting the highs, and we clearly fell off. Now when we look at the market price action, you will see there was a megaphone effect on both the SPY and the QQQ, so not really a surprise here. However, the surprising was that the Feds pretty much canceled the Christmas party, so we're not going to get any fireworks or something like that. So even Santa might not come, you know. Most analysts are now taking the stocks are going to make new lows before Christmas. One more thing, however, I need to note here is that there's been a growing resilience with analysts and market participants calling the Fed to stop this, with some even going forward to suggest that we might actually need a rate cut before the mid of next year because markets are not going to survive. Now, clearly, Powell doesn't care that much about the markets, but again, let me remind you that the Congress and the members of the Congress are huge market participants, more often than not, and none of them would like to see market struggles that much. Of course, good market is not what Fed wants when we're talking about inflation, so this is one part of taming the inflation. But clearly, inflation has peaked, especially according to analysts, and looking at the price of oil and gas dropping significantly lower than its highs, we can see the reason why. So that's what I have for my notes. It's all about the Fed right now, and whether you like it or not, we are in this environment until the Fed decides to change their course. The only problem, as I mentioned in chat, is that we have never seen such a huge level of debt to GDP for the United States, which stands at more than 120% right now, and really switching from quantitative tightening to quantitative easing is not something that the Fed would want to do immediately, although, as Powell said, strong job market might take us out of this hard situation. So it's up to see, and as I said, we are watching the Fed very closely. Now let's go to the market price action and look at some charts. So starting with the S&P 500, this is the daily chart, have a volume at the bottom. What you will see right here, we have 4 days, and this is where the FOMC meeting happened. So we have 4 days of extremely negative action right here. Volume is elevated. This 100% is the 20-day moving average volume. So volume has been 150% above the 20-day moving average for the last 4 days. Clearly bearish going into Christmas. Now there are some levels that I want to show you guys here what we rejected. The first one, obviously, we have this trend line on top that was rejected once right here, beginning of December, and then we popped right here into the consumer price index numbers, and we then were rejected sharply. Then we had the FOMC hawkish comments from Powell, and we just broke down. So this level around 410, 412 was the point of rejection, huge bars. Then we had the support at 390, basically played around it, but next day on Friday we gapped under and we closed another low. So here are a couple of levels that I'm watching right now. I mentioned in chat, we do have this formation right here that last time proved to be some sort a support. You can see this move down, then we reversed and pretty much screwed over everybody who was short on this very bearish looking candle, and we gapped up. So we are right here at the open of this candle. We found some support, bounced back late on Friday, so it's up to see what happens on Monday morning when we do open. However, there are some other levels that I'm looking at, and you can see that this is an important level here that was support back in May. We also have other levels like this lonely candle right here that is coming from the COVID low that is also supporting. You can see right here we had the same rejection of this high. Basically this is keeping us at support, same as right here. And last but not least, we have the bottom of this candle, which also proved to be support at some point. Now, if we look at the weekly, you'll see one of those lines. This is the COVID trend line. You'll see one of those lines right here on the weekly. That is my best bet that we can stop right there or right around here at 370. You can see a lot of action right here. Rejection. So this is a place where around 370 we might be able to find some support. Now let's take a look at the QQQ, and again we are going to start with the weekly. Now the weekly doesn't look as bad as the daily, but you can see this huge rejection candle right here on the weekly, and looks like we are aiming for the lower parts, which are somewhere around 359, 360, 362. These are the levels that I'll be looking for us to actually find some support. Now if we switch back to the daily, which is more important in this case, you can see this level right here, and I'll just put some levels so you can see them. This is the first one that I think that we should be careful about. We do have some support right here on some volume, and volume for the last 4 days, same thing as the SPY, selling off pretty hard. We also have this doji right here, and we do have a gap over this on the last attempt to break underneath this level. It was rejected on the very next day. We gapped over the high of the doji, then that has been some sort of support for now. Currently we're sitting right at the low of this candle right here, so below us is the gap. So if we go and close this gap, we might see some reaction right here, as I pointed out on the doji line. But if we fail this, of course we're looking to break those lows right here. So this is the next obvious support zone around 260, and then of course we have this 254 it being the lowest. If we close right here, I am thinking that we might actually see some support right here. And I mentioned the megaphone effect right here on those lines. You can see them clearly. Let's extend them to the right, and you can see right here what we're talking about. We had this for a couple of days and it was going. I showed it in chat. We're definitely looking to break this megaphone effect, so we did. IWM has been the weakest in this regard. As of recently, you can see the lower highs that we're making. So we have a high, then a higher high, then we're starting to roll a little bit lower, so lower high and then another lower high, rejection of this trend line support at the back, and now we are gapping down. What is worse for me right here is we were not able to flip this zone from these two lows, double bottom right here. We were not able to flip this as support. We closed underneath, you can see. So I'm thinking that we might actually be seeing more negative action on the IWM. The only thing that is actually good is that we actually closed positive, so we closed higher than, but volume was extreme, so it doesn't really show that much support right here. This zone is very important. If we are able to flip that, maybe on Monday, gap up, test it, and remain positive, that would look good for the IWM. Right now, it definitely looks like the weakest of them all. Last but not least, I want to also take a look at what oil is doing, because it has been really weak. These are the futures, the crude oil futures. You can definitely see that we are breaking all sorts of support. We're going this slope on the trend line right here, and I'm thinking, as I mentioned in chat, that crude will continue to drop just because it's so vital for inflation. So basically, if we do have higher price crude, that means that the inflation will keep on going higher and higher, and that's major effort from the Fed to pretty much stop inflation. So definitely looking on the downtrend. You can see it on the daily, you can see it on the weekly. One thing that I also wanted to mention here was VIX, and we have had, that's supposed to be fixed now, VIC, gosh. So VIX, we had this trend line. Let me just move a little bit forward in time. So we had this trend line from the bottom on VIX. We pushed back and we rejected. So next obvious zone where VIX might find some support, and I'm doing these trend lines especially for the guy in YouTube that says that you cannot just connect two dots and call them a trend line and expect to find support and resistance there. Well, voila, so there's some magic here and it just works. I don't know why, but this forex guy clearly doesn't think so. Anyway, that's just a friendly pick right here. So nothing against the guy at all. Just his ads. Retail traders, they know nothing about it. But anyway, next obvious zone to expect for the VIX to pop up right around 32, 33. And that's pretty much what I have for you for the index price action. Now let's move on to some of the market internals, because that's also an interesting part to look at. And we'll see what they're telling us. But from the get-go, I can tell you that it's not looking good. So, market internals. Now, the first one that we're going to be looking at is comparison between Nasdaq Composite and the S&P 500. Clearly, Nasdaq Composite, being the white line, is below the S&P 500, and that's all you need to know right now. Basically, growth is weaker than S&P 500, so we are in a risk-off mode. As far as my oscillators are concerned, the ones that are based on the advanced decline issues and advanced decline volume, they're both softly oversold right here at these levels, and we might be actually getting a surprise on Monday. The spike bread thrust is approaching the oversold level of 40 as well, and McClellan in the oscillator is clearly oversold. As far as other internals, the put call ratio is elevated at 0.97. This is the 5-day moving average, and we also have a reading of 1.14 for the daily. So we are in an extreme hedging situation and traders are scared, which conversely it's good for us because this is where bottoms happen. The new highs, new lows, obviously both Nasdaq and S&P 500, they are negative. You can see right here, they have been very few times during this year that we have seen positive readings, and you can see clearly going on the negative side. We already talked about VIX, and this is the up-down volume from the four major exchanges. You have the New York Stock Exchange. You can see what happens on Wednesday, Thursday, and Friday. The Nasdaq, same thing, Wednesday, Thursday, Friday. Russell 2000, although we had a positive day, the up-down volume was quite negative for Russell as well on Friday, and Dow Jones, you can clearly see, was the weakest on Friday in terms of that. As far as the advanced decline issues, let's zoom in a little bit. Here is the picture for New York Stock Exchange. Friday wasn't as bad as Thursday. We saw this rally at the end of the day. As I said, we pulled off some major levels. The Nasdaq, you can see it as well, same story with Russell, and Dow Jones was a little bit weaker than expected. Now, one thing that I've been preaching for quite some time now is these two indicators, the stocks above their 50-day moving average on the S&P 500. This is the first one, and I told you that making a new high, or in this case making the pretty much breaking even with the new high on the 30th of November was quite weird, because this is the second highest reading for this year. You can see the reading from the beginning of January, and we were at 92, I think, 92% of all stocks in the S&P 500 were above their 50-day moving average on the 30th of November. Now let's take a look at the other indicator, and then we will switch to a chart of the S&P 500 so I can show what I'm talking about. We had the second highest reading here on the 30th of November. 63% of all stocks in the S&P 500 were above their 200-day moving average. This is the second highest reading after the one on the 4th of January. And this is the ticker for this indicator. You can see it in Thinkorswim. Now let's revert to a chart of the S&P 500. My keyboard is playing some tricks on me. We're gonna get it. I hope so, maybe. Yep, SPY. And we're just not gonna switch it to a candle chart or bar chart, but this is 2022, and you can clearly see that the highest point we had right here on the 4th of January, and then we had two higher highs than the one on the 30th of November. Yet 30th November, as I said, was break even with the highest for stocks above their 50-day moving average and the second highest as far as the 200-day moving average. So clearly something was off. I don't have any more internals to show you, but we are definitely not looking good. As I said, we might actually get a surprise on Monday just based on my oscillators and the action in the advanced decline issues on Friday, which was a little bit better than the one that we had on Thursday. But that's about it. Now let's go to the sentiment. And for sentiment, the fear and greed index from CNN now is pointing at 42, which is lower by 11 points than the neutral reading we had last week at 53. You can see right here. Fear and greed index for Bitcoin remains 26 from last year, which is really surprising given the fact that we had news that Binance, which is the largest crypto exchange, might be in trouble. And it's also something that popped up on the newswire is that ARK, Cathy Wood's fund, has been buying Bitcoin during this week and is still remaining quite bullish on it. You can see it in the price action from this week. Bitcoin popped a little bit as well as Ethereum. So that is quite interesting given the bad news coming from the crypto sphere. So when bad news are no longer bad news, you might be expecting some move. And with the Fed, approaching the end of their planned rate hikes in February and March, we might be seeing a good year next year. But it's up to see. Don't take my advice for a financial recommendation. This is my personal view. Now, as far as seasonality goes, I've mentioned a couple of times Nasdaq's December is not the strongest month for Nasdaq. You can see 58 out of 100, and for the S&P 500 we have 74, so quite a stronger month for the S&P 500. But remember, we have never been in a situation like we are right now, right after COVID, which was a huge black swan event, right off of quantitative easing that has seen trillions and trillions of dollars pumped into the economy, and a market trying to shake off the inflation right now of this Russia-Ukraine conflict. So it's really a very, very different circumstance than we've had before, so don't take this for granted and trade off these probabilities. In summary, the models are on sell signal. They're virtually none in terms of setups on breakouts. The market is negative, put volume is increasing, volatility is increasing, we have recession and Fed hikes, and I would urge you to be patient. If there is a time in the year that it's perfect for you to take a break, spend some time with your loved ones, with your family, now is the time. You won't regret it. Just take some break and be back here for 2023. It's gonna be a tough year for sure, but I'm also thinking it's gonna be an amazing year for opportunities. And that's it for me for this week. Of course, we're gonna have another one next week on Christmas. If you enjoy this and you think this is beneficial for you, please leave a like, subscribe to our channel, leave in the comment section, or even better, you can come to our Discord server and hang out with us while we trade, learn something, teach us things. You know, we have an amazing community of people there, very good traders, so I'm sure that you can bring into the community something as well. If I don't see you there, again, next week, see you here. Happy holidays, and be patient. See you guys. Bye-bye.